Okay, let's work problem 8-9A together. That is on page 309 in your textbook and work papers 274 and 275. Problem 8-9A says Mary Loesch operates a travel agency called Mary's Luxury Travel. She has 5 employees, all of whom are paid on a weekly basis. The travel agency uses a payroll register, individual employee earnings records, and a general journal. Mary's Luxury Travel uses weekly federal income tax withholding table like the one in figure 8.4 on pages 288 and 289. The payroll data for each employee for the week ended March 22nd, 2020 are given below. Employees are paid 1.5 times the regular rate for hours worked over 30. So time and a half for hours worked over 40. 40. So you can see we have the information for the 5 employees. Social Security tax is withheld from the first $118,500 of earnings at the rate of 6.2%. Medicare tax is withheld at the rate of 1.45%. And the city earnings tax at the rate of 1%. So most of our problems do not have a city tax, but this one does, 1%. And both the Medicare tax and the city earnings tax are applied to gross pay. Bacon and Luong have $15 withheld, and Cole and Hicks have $5 withheld for health insurance. Bacon and Luong have $20 withheld to be invested in a travel agency's credit union. Cole has $38.75 withheld, and Hicks has $18.75 withheld for the savings bond purchase plan. So that information is going to be important when you're determining the deductions for the individual employees. Mary's Luxury Travel's payroll is met by drawing checks on its regular bank account. The checks were issued in sequence, beginning with check number 423. So our first requirement is to prepare the payroll register for Mary's Luxury Travel for the week ended March 22nd. This is in the taxable earnings / unemployment compensation columns. Enter the same amounts as the Social Security column. Total the amount columns, verify the totals, and rule with single and double lines. So, our first employee is Andrea Bacon. She had 4 allowances, married, 45 hours a week, rate $12 an hour, and then her earnings before this week were $5,480. Okay, so with that information, we can calculate her gross earnings. So she had 45 hours. We know 40 of those are going to be regular hours, 5 overtime, because it tells us in the problem that they were going to receive time and a half for hours worked over 40. So 40 hours are going to be times her regular rate of pay, which is 12. And then her overtime rate is going to be 12 times 1.5. So 12 times 1.5, her overtime rate is going to be 18. So this 5 hours times 18. Okay, so 40 times 12 is going to be the regular earnings, and 5 times 18 is going to be the overtime earnings. Okay, so with that information, let's go to our working papers. Okay, so it's already, and the excuse me, the payroll register stretches across both work paper 274 and work paper 275. It's one long sheet, but in your book it's stretched across both. So we will start by entering the employee's name, Andrea Bacon. Okay, sorry that this stylus is not letting me write neater. But our instructions said that she had 4 allowances and she is married. So when we calculate the 40 times 12, her regular earnings for this week are $480. Her overtime earnings, the 5 times 18, are $90. So when we add those two together, Andre will have total earnings of $570 for this week. So then the next column asks for the cumulative total. So if we look back, we can see that before this week, Andrea had $5,480. And so her cumulative total now would be the $5,480 plus the $570 that she earned this week. That's how you calculate the cumulative total. So $5,480 plus $570 will give us a cumulative total of $6,050. $6,050. Now, we're going to skip this column for the time being, so let's just do that. We'll learn more about the unemployment taxable earnings in the next chapter. So for now, we're just going to ignore that. The next column is taxable Social Security. How much of these earnings are taxable for Social Security? If you remember, Social Security is 6.2% times the first, I highlighted the wrong thing. How much of these earnings are taxable for Social Security is what we're looking for. How much of the 570 is taxable for Social Security? Okay, the rule is the first $118,500 of earnings is taxable for Social Security. Well, we just calculated that so far Andrea has $6,050, so she is nowhere near the limit. And so if she's has not reached the limit, then all of her earnings are taxable for Social Security. So the full $570 that she earned this period is taxable for Social Security. Okay, continuing on, and we'll need to go to the next work paper, we have to calculate the federal income tax. To do that, you must flip in your textbook to the wage bracket table. So flip to page 288 and 289. All right, 288 is single persons, 289 is married persons. So if we remember, Andrea is married with 4 allowances and her gross $570. That's what we need to calculate. So if we go to page 289 for married persons, and if you find the line, it says at least $570 but less than $580. That's where her gross pay would fall. And then we follow across and find 4 allowances. All right, so with that, we can determine that the amount of federal income tax that needs to be withheld, $10. Okay. The Social Security tax. To calculate Social Security tax, you always go to the Social Security taxable earnings column. Always go to this column. Yes, I know this time these two columns are the same, but they will not always be the same. So always, when you are calculating Social Security tax, come to this column. So 570 times the Social Security rate of 6.2% would give us a Social Security tax for Andrea of $35.34. Okay, Medicare tax. Remember, Medicare tax is 1.45% times the gross. There is no limit. So it's always, and they remind you of that in the instructions, that Medicare tax is 1.45%. And that is applied to gross pay. So Andrea's gross pay again, $570. We multiply that times 1.45%. Medicare tax for Andrea is going to be $8.27. Okay. Looking back at our instructions for this business, if you recall, there was a city earnings tax of 1%. Again, applied to gross pay. There is no limit there. So looking at the gross pay of $570, we will multiply that times 1% to calculate our city tax. That will be $570. Okay, looking back at your instructions, at your instructional page in your book, it said that Bacon had health insurance withheld $15 per week, and that Bacon also had an amount held for credit union at $20 per week. So we will write credit union here. I'll abbreviate since my pen will not let me write very small. And it's $20. Okay, so at this point, we have calculated all of the deductions. So now we must add those deductions together. So her total deductions, the total deductions for Andrea Bacon are $94.31. The next column says net pay. To calculate net pay, remember it is the total earnings minus the total deductions. Total earnings minus total deductions. So 570 minus 94.31 would give net pay for this employee $475.69. And also our instructions told us that they started paying the employees with check number 423. Okay, so that is the information for Andrea Bacon. And now we'll move down to our next employee. And our next employee is Andrew Cole. And your textbook tells you that Andrew is single and claiming one allowance. Okay? Says that Andrew worked 40 hours this week. So 40 hours, there will not be any overtime. His rate of pay is $12 per hour. So 40 times 12 would give Andrew regular earnings of $480. Again, no overtime, so therefore his total earnings would also be $480. The next column is cumulative total. So we look back at our book and it says that before this pay period, Andrew had $5,760. So if we add the $480 for this pay period to the $5,760 cumulative before this pay period, his new cumulative total is going to be $6,240. Again, we're ignoring the unemployment taxable earnings column right now. So how much of his earnings is taxable for Social Security? Again, it's all taxable until you exceed the $118,500 limit. He's nowhere near that limit. So all of his earnings are going to be taxable. The entire $480 for the week are taxable for Social Security. Okay, then our next step is to calculate the federal income tax. So you will flip back in your book to the wage bracket table on 288, 289. Andrew is single. So this time we need to look at 288. His gross pay was $480. So where would that fall? If the wages are at least $480 but less than $490, that would be the line that we need to look at. And follow over, he only has one allowance. So where those two intersect, $480 but less than $490 and one allowance, that would give us a federal income tax deduction of $46. Okay, Social Security tax, 6.2% times what we determined was taxable for Social Security. So we're going back to the taxable earnings Social Security column. $480 times 6.2% would give us Social Security tax for Andrew of $29.76. Medicare tax, the next column, is always 1.45% times the gross earnings. So we always go to the total earnings column when we're calculating Medicare tax. So $480 times 1.45% is going to give us Medicare tax of $6.96. $6.96. As we were told in our instructions, the city tax is 1% of gross. So we go back to that total earnings column. It's $480. So we multiply it times 1%. Our city tax is going to be $4.80. The next column, health insurance. The instructions told us that Cole has $5 in health insurance withheld each week, and that he also has an amount for bonds withheld each week. So since we do not have a special column for bonds, we'll use the other column, and it's withheld at $38.75. $38.75. Okay, and then we add all of our deductions across here to get the total deduction. So when we add those, our total deductions for Andrew should be $131.27. Now we must compute the net pay for Andrew Cole. So we will simply take his total earnings of $480 and subtract his total deductions of $131.27 to calculate the net pay. and we will get $348.73. I'm going to try that again. $348.73. Again, I apologize that these numbers are not better. Okay, and then the check number would just be the next one in this sequence, 424. Okay, so that is the information for Andrew Cole. We'll move down to our next employee, Melvin Hicks. And your textbook says that Melvin is married with 3 allowances. Okay, says that Melvin worked 44 hours during the week and his base pay is $10.50. Okay, so 40 hours for Melvin are going to be at regular time, so that would be 40 times the $10.50, and 4 hours are going to be overtime. So to calculate the overtime pay, it would be $10.50 times 1.5. Okay, so $10.50 times 1.5 would give you Melvin's overtime pay of $15.75 per hour. So when you multiply 40 times $10.50, you'll calculate that Melvin had $420 in regular pay. And then when you calculate his overtime pay, the 4 hours times 15.75, then you calculate he has overtime pay of $63. Okay, so once you have that calculated, and again, just on your calculator or using scratch paper, I'm just writing it in the margins here to try to explain to you, then we will enter the information in the payroll register. So he had $420 of regular earnings, $63 in overtime. So the total, when we add those two together, is going to be $483. Okay, I'm going to try to get this highlight off of here. Okay, maybe that will be legible. Okay, just don't want that to confuse us later on. Okay, so for Melvin, $420 in regular pay, $63 in overtime pay, for a total of $483. His cumulative total is going to be his cumulative before this pay period. So the total earnings was $4,960 plus the $483 would give us a cumulative total for Melvin of $54.43. Okay. So how much is taxable for Social Security? How much of these earnings is taxable for Social Security? Again, if you look at his limit, he's nowhere near the $118,500 limit. So if he hasn't met the limit, then all of it is taxable for Social Security, the full $483. And now we're ready to calculate the deductions. I need to try to get rid of this highlight as well that I forgot to. Let's see. Okay, let me correct this quickly and then we'll move on. Okay, so we are calculating his federal income tax withholding. So his gross pay was $483. He was married with 3 allowances. So we're going to look at page 289, the married person's page. 483 falls in the line that says if at least 480 but less than 490. And then where that intersects the column for 3 allowances would give us $9 in federal income tax withholding. For Social Security tax, we always come back and look at the taxable earnings Social Security column. This is always where we're going when we are calculating Social Security tax. So it would be 483 times our Social Security tax rate of 6.2%. So our Social Security tax that we are going to withhold for Melvin is going to be $29.95. The Medicare tax is always 1.45% times the gross earnings. So when we're calculating Medicare tax, we're always coming to this column to get our number. So 483 times 1.45% Medicare rate is going to give us a Medicare tax of $7. The city tax in this problem, as we were instructed, is 1% times the gross earnings. So 1% times 483 is going to give Melvin a city tax of $4.83. Reading the instructions for the problem, Melvin has $5 withheld for health insurance. And Melvin also has $18.75 for bonds. So since there, again, is no specific column for the bonds, then we have to use the other. So we'll write in bonds, and then the amount was $18.75. So if we add all of our deductions for Melvin, we'll add those across, and the total deductions for Melvin, $74.53. And then we take our total earnings minus our total deductions. So 483 less 74.53 will give net pay of $408.47. $408.47. And it would be check number 425. And then we'll move to our next employee, Kara Long. So Kara Long is single and claiming 1 allowance. It says that Kara worked 36 hours, $11 an hour. So she was less than 40 hours this week, so she will not have any overtime. So we will calculate her earnings by multiplying 36 hours times $11 per hour. And Kara's regular earnings then are $3.96. Since there's no overtime, then her total earnings will also be $3.96. The cumulative total is going to be the $5,125.50 plus this week's earnings of $3.96 would give Kara a cumulative total of $5,521.50. How much of this week's earnings are taxable for Social Security? All of it, because she's nowhere near the $118,500 limit. So the full $396 is taxable for Social Security. Moving on, we need to calculate the deductions for Kara. So federal income tax, go back to pages 288, 289 in your textbook. Kara earned, well, first off, she's single. So that means we're going to be looking at page 288. Kara earned $396 this week. So we're going to follow down and find the line if at least $390 but less than $400. And follow over to where that intersects one allowance. And so you'll find that Kara's federal income tax withholding is going to be $32. Next is Social Security tax. So we go back to our column that says how much of this is taxable for Social Security. So it said $396 is taxable for Social Security. So we multiplied that times 6.2%, and we will get Social Security tax for Kara of $24.55. Medicare tax is always the gross pay, the total earnings, times 1.45%. So $396 times 1.45% is going to give Kara a Medicare tax of $5.74. The next column is the city tax. In this problem, it's 1% of gross. So 396 times 1% gives Kara city tax of $3.96. In our instructions, it said Kara has 15 withheld for health insurance, and she has $20 withheld for the credit union. So we will write credit union in our other column and enter the deduction of $20. So with all of that information, we can add across to get all of the deductions for Kara. And so the total deductions are $101.25. Okay, and then we subtract those total deductions of $101.25 from Kara's gross pay of $396. So $396 minus $101.25 would give us Kara's net pay of $294.75. $294.75. I'm going to try that again to see if we can make it the numbers look better. Yeah, I don't think that helped much. Okay, and then of course it would be check number 426. All right, and then we're ready to move to our last employee, which is Melissa Melling. So Melissa is married with 2 allowances. It tells us that Melissa worked 40 hours this week at $10.50 per hour. So since she only worked 40 hours, there will not be any overtime. So 40 times $10.50 gives Melissa regular pay of $4.20. Since there are no overtime hours, then her total pay is also going to be $4.20. We take her cumulative before this pay period of $44,720.50. We add the current earnings of $4.20 so that Kara's cumulative pay now is $5,140.50. Okay, she's nowhere near the Social Security limit, so when we're calculating how much is going to be taxable for Social Security, correcting this above, what's going to be taxable for Social Security is all of it. So the full $4.20 is going to be taxable for Social Security. Okay, then we'll move across to the other side of our register to calculate the deductions. So first, the federal income tax deductions. You're going to go to page 288, 289. Melissa's married, so we will be looking at page 289. Find the line where her earnings of $4.20 would intersect her allowances of $2. And you should find that there would be federal income tax withheld of $11. Social Security tax, we go back to the column, what is taxable for Social Security? It is $4.20 times the Social Security tax rate of 6.2%. So Melissa's Social Security tax is going to be $26.04. Medicare tax is always taxable times the gross pay. So 1.45% times her gross pay of $4.20 will give Medicare tax of $6.09. The city earnings tax is 1% times her gross earnings of $4.20. So in this, for this employee, it's going to be $4.20. And Melissa did not have any additional withholdings. So that is all for Melissa. And so we will add those deductions across to get her total deductions of $47.33. So if you take Melissa's gross pay of $420, subtract her deductions of $423, her net pay is $372.67. And we would issue her check number 427. Okay, so those are our 5 employees for this business. Now, the payroll register helps us determine the gross, the regular pay, overtime pay, gross pay, and the deductions. But in order to record the payroll in our accounting records, then we must first total this payroll register. So there will be a single ruling beneath all of your amount columns. And we're going to add. So the regular earnings, when we add those together, we should get $2,196. When we add the overtime earnings, we should calculate that to be 153. When we add the total earnings column, we should 2,349. The total of the cumulative total column is 28,395. I'm not sure if I'm going to be able to get that in there or not. 28,395. 28,395. The total of the Social Security taxable earnings is 2,349. Okay, then we'll move across and total the rest of our columns. Okay, so the total of the income tax withholding is 108. The total of the Social Security tax is 145.64. The total of the Medicare tax is 3406. The total of the city tax is 2349. The total of the health insurance deductions is 40. And the total of the other deductions, 97.50. The total of the total deductions column, 448.69. 448.69. And then the total of the net pay column is 1,900. But I'm going to try this again. See if we can. 1,931. This is just hard to write with the stylus. 31. 1,931. I shouldn't have ruled under the check number column because of course we're not going to total that. Okay, before we double rule, let's check our figures. So the first thing that we can do is check. Does this total plus this total equal this total? Because your regular earnings column plus your overtime's earnings column should equal your total earnings. So you can double check figures there. Okay, then come across to the other side. You should be able to double check if you add all of these totals. Does that equal the total of your total deductions? It has to, unless you've made a mistake. And then you can further check your work by taking the amount from your total earnings column and subtracting the total from your total earnings column, and that should match what you had for the total of the net pay column. So do all those things to double check your figures and make sure that you have not made any mistakes. And when those do balance, then you double rule your payroll register. And again, with this pen, it's really hard, but so we double rule our register. Okay. So we've double ruled both sides of our register to indicate that the register is in balance. Okay, so in our instructions, it asks us to prepare the payroll register and verify the totals and rule, and so we just completed that step. Step 2 says, assuming the wages for the week ended March 22nd were paid on March 24th, prepare a journal entry for the payment of the payroll. So that is our last step in this problem, is to prepare the journal entry here for the payment of this payroll. So first off, it said that this payroll for March 22nd was going to be paid on, it's 2020. It said it was going to be paid on March 24th. So we will date our entry for the day that the payroll is actually paid. So March 24th. Now, when you're recording the payroll, wages and salaries expense is always going to be debited for the total of the total earnings. So I'll say that again. When you're recording your payroll using the payroll register, wages and salaries expense is always going to be debited for the total of the total earnings column. So the total of the total earnings column is $2,349. So we will go to our journal and enter the debit to wages and salaries expense. For $2,349. Okay, and then, so that's always our debit. Our credits are always for each of the deduction. So you will have a credit for each of the different deductions that were calculated. So we will credit federal income tax payable for the 108 here. We will credit Social Security tax payable for the 145.64. We'll credit Medicare tax payable for the 3406, and so forth. Even here, with these deductions in the other column, you're going to have credit union payable for the total of these two. So that'll be $40. And then you're going to have a savings bond payable for the total for these two. So each deduction is going to require a credit in your journal entry. So we will, again, credit federal income tax payable. All of them are payables. They're liabilities because you're just holding this money from your employees but to send to the government. It's not your money. You owe it to the agency that you're withholding it for. So 117, and then the total of the Social Security tax payable column will be a credit to Social. And that is going to be one. I'm sorry. This should have been 108. My key is wrong and I was copying from the key, but just remind you where I'm getting this from. those two amounts should match. It's the federal income tax payable column, and so the total was 108, so that should be my credit to federal income tax payable. Now I'm entering the credit to Social Security tax payable, so the total for that column that I need to record in my journal is 145.64. Okay, the next column is the Medicare tax payable column. And the total of that column is 3406. The next column is the city tax payable column. And the total of that column on our payroll register is $23.49. The next column is the health insurance deduction, so we will health insurance payable. And so the total of that column was 40. Okay, and then in the other column, again, we have two amounts in there. We have some amounts for credit union withholdings and bond withholdings. So we will have to have a separate account for each of those. So first we will say credit union payable. And that would be the total of those two deductions, 40. And then our last deduction will be savings bonds payable. And the total of those be $57.50. Okay, if you know right now, notice right now that your entry does not balance. So we have a debit to wages and salaries expense for the gross pay, the total of all the earnings. Then we have a credit for each of the deductions. The difference between those two was the net pay. So the credit to cash, a lot of times students forget that. Don't forget that to balance this entry, you're going to have to credit cash for the amount that the checks were actually written for. So we will have a credit to cash for $1,931. So we'll come back down to finish up our entry, and we're going to credit cash for $1,931. And now if you should always double check and make sure that your debits equal your credits. And our explanation here is going to be payroll for week 3/22. So it's the payroll for March 22nd. We're paying that payroll on March 24th. That's why that date there says March 24th. We debit wages and salaries expense for the total earnings, credit each of the liability accounts, and credit cash for the net pay.